Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad. How are you?
We are here, my friend. And the year's just getting off to a hot start. We are launching just so many different webinars. We had a really successful one yesterday, but it'll be about a week after this video gets announced. And it's just really cool to see the community just come back in full circle. And also saw a Housing Wire article that was talking about one, the amount of different loan officers exiting the industry, but more importantly, it's also showcasing all the different retail loan officers still jumping over to the broker space. I think we had like a 12% increase when it comes to mortgage brokers, which is a really big win. So shout out to all of y'all jumping into the independent space. We are here to help you every step of the way.
Absolutely. Well, we got a lot to discuss today. We have the Broker Buzz, where we will dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have the sales pitch training, where John helps us become better salespeople. And then we'll wrap things up, as always, with story time with John. But first, we have a fortune cookie. This is one of the few that survived going to Fuse and back and did not break. There are like 4 of them. This week's, you have a remarkable ability to make new friends.
I feel like that one speaks to both of us pretty.
Yeah,
pretty
I think we've both been complimented on that, and definitely is in our wheelhouse of skills.
It is, and I'll start this one. Thinking about you with this one here, I think one of the big things for me has been, you and I've talked about this, but making the right friends.
Yes.
And not everybody not everybody, and it's not even, the word isn't deserve. That's the wrong word. I don't like that, right? Because everybody deserves a chance to have a conversation, right? And some
Absolutely.
people are just completely lost and I don't want to talk to them anyway. But it's just about your circle that you have around you. And sometimes you have to be very cautious of who you bring in your circle. You just might be at a different place in your life, and there's nothing wrong with that. And even building the relationship with you, I enjoy it because you understand where I'm at in my life. I understand where you're at in yours. We don't make each other feel bad, like if things pop up. It's just more so, hey, when we do connect, or if I come out to Philly, or if you're here in town, it's just like we're able to talk about whatever it is. And then the biggest thing too, it's just judgment free.
Yeah.
And it's really judgment free, right? Where it's like you might hear something, you're like, oh shit, excuse my language, but you're like, what?
No.
Oh, it is what it is.
All right, cool. Glad to know.
Yeah, all right, noted. But no, I like that one a lot. I do have that ability. You have that ability as well. But it is important to make sure that you're getting the right people around you, especially as you continue to go through this journey called life.
Oh, 100%. And it's one of those things where I forget who taught it to me, definitely an older mentor. You are the sum of the 5 people you spend the most time around. So if you are looking to grow in your life, or from where you're at currently, surround yourself by people that are in the place you want to be. And then if you are in that place and you are comfortable and you are happy with where you're at, maybe consider surrounding yourself with people that could use a hand up so that you can pull them up to where you are, and you can return the favor from the people. It's kind of like that karma thing, right? Like you put it forward and you have mentors that pull you up, and then you have to be making sure you're looking behind you to see who you can pull up as well. And so I am in a place right now where I have 3 people that I view as mentors, and I surround myself with and try and spend as much time with talking to, so that they pull me up. But I also feel like I'm at the place where I have 2 friends that are also looking for that hand to be lifted up. And I'm able to extend that hand out to them. So before it was probably like a 4-to-1 ratio, but now I feel like I've moved up to a 3-to-2 ratio, if that makes sense.
It does.
And I think that's just a blessing that I've been able to navigate, and just keeping that kind of mental thing. And it's not like, obviously most people have more than 5 friends, but it's just having that, being cognizant of those 5 because you probably can nail down 5. There probably aren't 5 people that you talk to every single day. So it's who are the 5 people that you talk to the most, and those are the people that we're talking about.
100%. 100%. I like that a lot.
Yeah, no, and it's been very beneficial, and I've had those conversations with my mentors and just been like, "This is how I view it," and they were like, "Yes, that's how I've learned." And it really does work, and it's not manifesting or anything like that. It's just you learn things when you surround yourself with people that are in the position that you want to someday be in. But
That's a good one. I
thank
like
you.
that one.
Yeah, that was a good one. That's definitely going in the they all go in the envelope, but that's gonna be a good one to look
This is the
reflect
other
on.
envelope.
This is the other envelope. I'll need to
Yeah.
start a second one of the really good ones. But we have the broker buzz. So let's dive in with our first question of the week. John, how do you handle a pre-approval where the client wants to buy a duplex and rent out one side, live in the other? Case by case for the estimated rental income, looking to do FHA.
So, number one, it is very important that you set the groundwork here up front. And here's what I mean by that. So, if it's looking at a duplex, the answer is yes, you can leverage that. You can potentially use the estimated rents. However, if the place is already rented out, the underwriters are going to ask for lease agreements up front. It's very important you tell your client that and the real estate agent that. A lot of the times they don't know, especially if they're not as familiar with duplexes or going FHA when it comes to 2 units. But what I mean by that is, let's just say, Tommy, you and I are living in a duplex and I rent one side, you rent another side. And then the owner of our duplex decides to sell to this potential future homeowner that's coming in to pre approve. Well, they have to grab the lease agreement from both you and I up front. And the reason being is they can't just kick us out. So
Right.
they wouldn't just be allowed to come in and then kick you and I out if our lease agreement has any kind of specifics surrounding the term. Now, if we're on like a 30-day, that's fine. We can get that situated and get that figured out. The second piece of it is you can potentially leverage the rental income. Let's just say one of the units is rented out, the other one is not. You would still need that lease agreement, and that would be a big part of it. The other piece is you would have to just estimate based on what you were saying, but this is a great way for you to stay in touch with this consumer and the real estate agent. And I would make this the biggest part of the entire deal on why they should call you. I would say something along the lines of, hey, listen, Mr. and Mrs. Client, Mr. and Mrs. Agent, it is very important that when you find a house, you send me the address right away. The reason being is I can then do my due diligence and make sure we run into the least amount of hiccups possible. I assume you and I are on the same page wanting to have the least amount of hiccups. Is that fair for me to assume? Yes, great. Gain agreement, super easy. But what that does is that continues to open up the conversation and bring them back your way. So there are some nuances. It's not as complicated as it might seem. You just need to know what questions to ask. So really make sure you dive into lease agreements. Are both sides rented out currently? Is the place vacant? Whatever the case might be, would be a really important thing for you to do up front.
Awesome. Definitely good to know. It's funny because my parents and their best friends are actually looking to buy a duplex together. So uh, it just makes sense, right? As you get older, just having
Yeah.
friends just like literally right next door. How cool! I don't know. Dreams. That would be super cool to do. And our second question. Not my loan, so don't yell at me. The borrower recently got married, submitted the loan app in the new husband's last name, was in the process of changing her name, but closing is January 15th. And although the name change will be official, she won't have her social security card for 2 weeks after that, and thus no ID either. What is used at closing for identification in a situation like this? Hold up. Wait, does a social security card do you get a new social security card if you change your last name?
Yeah,
Interesting.
so
I didn't know that.
the name changes, so it's not tied to the same last name as before, the Social
Ah,
Security number
yeah,
itself.
yeah, yeah.
So in this instance, one, check with the lender first, then the title company. But so many times, I've been good with an AKA. So they literally can add an
Ah,
AKA to it. It's super simple. It's been very rare where I've had a lender or a title company tell me they're not going to do it. Usually it's because it's not like a conventional standard loan. So if it's not some sort of FHA conventional, something, standard outside of DSCR, non-QM, you're going to be able to do an AKA. Ask the client, I'm sorry, ask the title company, ask the lender, Make sure they're both good with it. Get it in writing. Put an email out. CYA always on this stuff, but it's legitimately an AKA form. You should not run into any troubles at all getting this done, as long as nothing's expired when it comes to like licenses or things of that nature. So, really good question. No one's yelling at you. It's one that pops up every once in a while, and if you've never dealt with it before, you're not going to know what to do or where to turn to. But simple solution 9 times out of 10.
And AKA is also known as, right?
That is correct.
Yeah.
Also known as form. And it's the 14th. So if this didn't get answered, Tommy, maybe we should go and answer the question for them. And brokers are best. So if it's in there somewhere, if no one's given them the right answer in there yet, let's make sure I get on that. And I'll
check. I'll send you the link.
Thank you.
You got it. And our final question of the week. Why aren't ARMs cheaper than mortgages right now? Borrowers have been willing to take the risk for a lower initial rate, but I am pricing ARMs higher, and even with 2 to 3 points, losing to banks and credit unions.
So I'm going to try to make this as simple as possible. This has to do with the yield curve, but every time I say that, people are like, what is it? How does it work? So I'm going to make it even more simple and then explain to you why banks and credit unions are able to offer better products. So this has to do with investors basically saying that, hey, we don't want to give better pricing on adjustable rate mortgages right now than we do 30-year fixed, because we don't think that consumer is going to stay in that adjustable rate long enough for us to make up our cost. They believe that interest rates on the 30-year are going to come down, and then therefore these clients are going to get bombarded with calls and be asked to refinance their mortgage. And they're probably right if you look at the historical data when it comes to people refinancing out of an ARM. So if they can't make their money fast enough, they are not going to sit there and offer this product up from the investor side. So you'll see a lot of points being attached to these specific types of loans. That's because they're just trying to make their money up front, because they don't believe that the client's going to be in the home long enough. That is the layman ways to explain it. There's a lot of intricacies that go into it when it comes to inverted yield curve, what it actually means, but I want to keep it as simple as possible. So why would a credit union, we'll start with credit union first, and then I'll move to regular banks. Credit unions are lending money to each other, right? So a credit union is not like going, even though they can sell to Fannie and Freddie, they can do all of that. A majority of the reason they can offer such different rates, even when it comes to a standard loan, is because they're borrowing money from each other. The members are paying into the credit union, and therefore they can offer more lucrative opportunities for consumers. Here's what you'll find with credit unions, and I've done this before with my consumers. You can go and say, hey, this client has money. They'll open up an account with you for $100,000, but they're looking for an adjustable rate mortgage. What can you do? Well, they'll offer you an incentive to bring your money over to them. That's how the actual banking system currently works. Standard banks, it's a fractionalized system, which means that they're borrowing your money to invest. And that's why you can't just go in there and pull out. If you have $1 million, you can't just pull out the $1 million. It takes time.
Right.
So the credit unions are doing the same thing, just on a smaller scale. So they're not worrying when it comes to the investors and when it comes to paybacks. They just want your money inside of the credit union because they're making more money with it that way. Banks operate in a similar fashion. The only other thing that banks can also add, which credit unions can add technically too, but the banks can also make money on the servicing of your portfolio. So if they say, okay, we're going to serve it, let's just say you have, that's why if you ever notice, you'll lose these jumbo loans to banks where you're like, how are they giving that rate? Well, if they're going to hold $1 million mortgage note, and then they're also going to get this client's money that stays with them, they're able to offset some of the rate that they charge on an ARM because they're holding the servicing portfolio. There's money made when you service the loan. Could be small, could be big, just depending on the way the loan is structured. But banks and credit unions have that flexibility that you as a mortgage broker do not have. So that is why you will see that occur on adjustable rate mortgages across the board. I hope I explained that as simply as possible.
Yeah, makes sense to me. I definitely understand it better now.
Mm-hmm.
Well, if you want your question answered on the Broker Power Up podcast, be sure to be an AIME member and be in the Brokers Are Best Facebook group. If you are not, you can scan the QR code, go to the link, and listen to the ad, and we'll be right back with some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do we got?
All right. So today is about Bandwagon, and I'm going to explain what that means. And it's such an underutilized sales tactic when it comes to the broker space that I'm not sure why it's so underutilized. So I was getting a car rental from Hertz the other day. And as I'm going through the car rental, I select my option. And then as I'm exiting, it has all these additional options and add-ons that I can do. But here's something that they did that was really cool. It would tell me how many people in 2025 also selected that option. So one of them was like the additional coverage just in case of crash or liability. And it would say something like 3.4 million people in 2025 used this coverage. Now, I clicked on it because I was like, wow, that's a lot of people to be using that kind of coverage. And then for me, I had to take a step back, right? Because it drew me in from an emotional standpoint. But then I realized that the credit card I use that's on file automatically gives me that coverage. So I was like, all right, hold on, take a chill. 1 second here, 1 second. Now, Hertz doesn't know that. That's not their job to know that. That's my job to make sure that I understand all the different benefits and opportunities I have with the cards that I use. But that's a bandwagon. And in the mortgage space, brokers, loan officers alike are not leveraging it as much as they can. There's also reverse bandwagon. So let me walk you through what a bandwagon could look like. So a bandwagon could be something as simple as, Tommy, most of my clients right now are getting into an adjustable rate mortgage. And the reason being is because of X, Y, or Z. Mm-hmm. That's one example of a bandwagon. Another example, hey, most of my clients right now are leveraging the equity in their home, whether it's a cash out refinance or home equity line of credit, to help pay off these high interest credit cards, because at the end of the day, interest is interest and you're better off paying a lesser amount. Is that fair to say? And so what you're doing here is you're creating a bandwagon. Now, what this does is this builds credibility. This lets people know that other people are doing what they're doing, especially in the space that we're in. Some people might feel embarrassed or I don't want to pay off my debt. Here's another perfect example of doing a bandwagon. Hey, most of my clients right now are taking an interest rate slightly higher than market. And the reason being is that's going to give you lesser cost that's going to be associated with your loan, which will mean that your balance will be lesser the next time around you go to refinance. And the reason they're doing this, Tommy, is because they believe, and so do I, quite frankly, that interest rates will continue to drop. So just in case they have to refinance more quickly, they want to make sure they're not adding too much to their principal balance. Now, between these two options, which option would you like? Another way that I bandwagon is when I'm presenting options to consumers. Hey, I'm going to go through two options with you. The first option is my professional recommendation and what many clients are taking. The second option is a lower interest rate, just so I can make sure you can see the difference between the two. But where did you feel my emotion, Tommy? Where did you feel that I was leaning towards?
Obviously, the first where you suggest and a lot of your other clients are doing. So it just
That's
feels like you want
exactly
to
it.
follow the crowd. It's like, oh, well, if, like eggs, right? Like you go to a fancy grocery store, they're going to be more expensive than if you go to Costco. Like, but you could buy your eggs here, or you can buy your eggs over at the expensive restaurant or expensive grocery store. But how many people do? Not as many as over here.
That's exactly it. And there's nothing wrong with that. And that's
People
the
do that and
truth.
make
Like,
that decision all the time without realizing it.
and that's what you're talking towards, is that psychology of exactly what you said. And so this allows you to also gauge the temperature of the consumer. So how many different areas in your business can you bandwagon? How many different opportunities? I bandwagon with everything whenever I can. Even right now, I've been talking about past clients and staying in touch with them. Hey, I've been talking to a lot of my past clients that are in a similar situation like you are. Everyone's working hard to live the American dream, but just like life happens, things keep popping up. And they're putting some of their additional expenses on their credit cards that have these high interest rates. And based on the credit report I'm looking at, that might be the situation you're in. Is that fair for me to say, or am I looking at this incorrectly?
Yeah, they could be over.
It's all an art. What were you going to say, Tommy?
It people. I feel like credit card debt is something that people can very easily hide. Not from mortgage brokers, I guess, but
No, you can't.
yeah. In like social normalcy. Like you can see people like a group of friends hanging out and they're all dressed the same. They all ordered the same beer. They all ordered they all are doing the same things, living the same lifestyle, but they're probably not all in the same financial position.
They're not, man. And that's why it's just so important to make them feel good. That the second piece of this is it builds trust without bragging.
Yeah.
You're truly helping them build trust. You're not bragging. And by the way, be truthful. Okay. Let me
Yeah. Oh,
let me go
absolutely. Yeah.
back. Don't just
Yeah.
be making stuff up. Have conversations, walk through, and talk to your colleagues as well, right? Like that is also truthful information. If your colleagues are dealing with the same thing, hey, most of the clients my team and I are talking to, be truthful. It's very important. That's the
Yeah.
number one. I'm assuming that, but I just want to throw it out there just
Yeah,
in
no,
case.
that's yes, you should always be truthful.
And the last part of it, step 3 here, is it shifts the client from emotion to logic, right? It's emotional to talk about credit card debt. It's emotional to talk about your biggest financial transaction. It's your home. For 99% of consumers, it's the biggest purchase they ever make in their lifetime. So this shifts away from the emotion into logic. I don't want to add anything to my principal balance. Mr. or Mrs. Client, I completely understand what you're coming from. And a lot of clients I talk to initially say the exact same thing you just said. What they've come to find is that after a brief conversation and diving deep into their credit report and into their finances, we see that they have a lot of credit card debt with very high interest rates. And a lot of them are just paying the minimum payment. So rest assured, by no means am I saying you have to do something right now. What I am saying is that it's worth a conversation for us to take a look at your profile and see if there's an opportunity for us to leverage your home's equity to put you in a better financial position for you and your family, because you and I both know, Tommy, that equity is not real. It can go away overnight. Who's not going to have a conversation with you when you speak that way?
Oh, yeah, absolutely.
And the last piece of it, y'all, there's a reverse bandwagon as well. And I'll leverage this bandwagon to I'm just gonna tell y'all, this is to bring a guard down if a client's coming in really hot, really aggressive. And sometimes the client comes in and they think they know everything. And now with Chat GPT, sometimes it feels that way.
No, everyone's
So
an expert.
Yes. So reverse bandwagon, be very cautious how you do this. Do not be condescending. There's a fine line here. But a reverse bandwagon is this: client comes in, they're being aggressive. I just want the 30-year, give me the 30-year rate, give me this. That's actually interesting, Tommy. A lot of the people I'm talking to right now are looking at a 15-year mortgage to pay their home off faster, is there a reason why you're looking just into the 30-year fixed? Right away, guard comes down so quickly, y'all. Now you have to be cautious, but you heard my tone. And this is a way for me. This is like, okay, you try to overcome the objection the first time. They're still yelling at you about the rate, APR, all the stuff that they think they're supposed to ask because of Chat GPT. Your job is to diffuse it. There's a way to do it with the reverse bandwagon. And that's just a really important piece. You can also do it in reverse. Mr. and Mrs. Client, that's really interesting. Most of my clients right now are actually looking at a 30-year mortgage as opposed to a 15-year. Can you walk me through why a 15-year makes the most sense for you and your family? Just so I can price this out correctly and make sure I get it right in the first try. Or clients that tell you, I want you to price me out a 15, a 20, and a 30-year. Yeah, I'm not doing that. That makes no sense. A 15-year, the payment's high. A 30-year, the payment's low. You can't talk that way because it'll completely disengage the consumer. So instead, hey, Mr. or Mrs. Client, generally when my clients call in asking for a 15, 20-year, or 30, it's just because, and then I'll go deep into the conversation and I'll walk them through. So let me ask you this question. Usually when my clients call in for a 30-year mortgage, it's because of the fact that they might want to be saving money on a monthly basis. So at the end of every month, do you look at your bank account and go, gosh, I wish I had a little bit more in it? Or do you look at it and go, I have extra that I can apply towards different debts that I have? Because that'll give us a really good idea of the best product for you and your family.
Yeah, and you have to establish, like, pushing back against the Chat GPT and the everyone's an expert, and reestablish yourself in the conversation as the professional.
Spot on. And y'all, so that is my sales tip that I have for y'all this week. We are doing this Friday. This will be shot afterwards, but we are doing a past client. I'm doing an entire webinar. We have hundreds and hundreds of registrations on this already. How to engage your past clients, how to talk to them, how to bandwagon. I mean, it is everything from start to finish on how I handle these conversations personally. So this will be placed after. However, for our AIME paid members only, you will be able to log into the portal and get a recording of this inside of your app Brokers Are Best portal. And you'll have access to it, but you must be a paid AIME member to do so. For everybody else, you'll have to be on the call directly, which will already have passed by the time you see this. And then the last thing I want to share, not much of a story, but a little story. I heard a quote a while back, and I grew up in a Middle Eastern household. So growing up in a Middle Eastern household, just one of the things, and it's not on purpose, it's just my family, I'm first generation. My family came from overseas. And there was a lot of this keeping up with the Joneses mentality. And I had that mentality for the longest time ever. And slowly over the last 5-6 years, just turning very minimalistic and just thinking about the bigger picture. So here's a quote I want to share with all of you. I look into your glass to see if you have enough. You look into mine to see if you have more than me. And I used to look into other people's glasses to see if they had more than me. So this isn't a shot at anybody. All I ask for each and every single one of you is when you're listening, even if your luck is down and you're not doing as well as you want to do, and it's tough financially for you. I've been in that spot. We've been in that spot. And what I can tell you is find a way to look into others and see if they have enough, and keep putting your hand out. It'll come back tenfold, and it'll fill you with so much peace and love and joy. Because the more you chase things, I'm telling you right now, firsthand, I started making money at 22 years old, making $300,000+ a year. And I'd spend it on going out and clothes and all of this stuff. And it doesn't fulfill you. I promise you, it does not fulfill you. And so please look into others' glass. My challenge to all of you is to look into other people's glass, see if they have enough. And if they don't, even if you just have a little to give it. You will feel so much better, and you will fulfill your purpose at the highest level possible. That's what we got for you, my friends, today. Take care.
I love that. Yeah, and it ties into our fortune cookie, right? With the friends.
Yep.
For making sure your friends have enough, and then not making sure you have as much as your friends, but making sure, looking at yourself as well, and just making sure you have enough and you're doing what you need to do.
Yes, sir.
Yeah, I like that a lot. Thank you for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor, hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel, ring the bell to get notified every time we drop new content, and share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep
Take
powering
care.
up.